Welcome back to Trade and Wait, aka Trader Sage. We're going to review price action on the ES for today, March 10th, 2026. This is all this what we drew yesterday during aftermarket, the post-mortem analysis. And this is part of my routine regardless. This is my equivalent of my book of charts, discussing these things here and releasing them. That's like a task in and of itself. So this is a 15-minute protocol. Go to the 4-hour first. I think all these 15-minute PD arrays. This is a RDRB rebalance, redelivered rebalance PD array. Let's isolate these two. Turn into one below. Put that back to 4-hour. Still, I don't know what these are. Let's just get this out of here. I'm not going to delete them because I'm not sure what they are. So just drop them down near. All right, so suggest. All right, so we got some body closures down here. Let's see. Yeah. All right, so you'll see that we are like playing around here. You can get into the wicks if you wanted to. This low key price didn't go down to this fair value gap. So yeah, I understand like why the weight could have been there to trade back down here. It didn't. Do have this liquidity void back here, the new week opening gap. I personally don't actively trade new week opening gap, so this is a gap too. Obviously, closed here, opened here, new week opening gap here. So this is the previous weeks. Then the next area of contention would be here on the 4-hour for me. This is an inverted bullish fair value gap that was used for resistance multiple times. So we want to see when price visits that again, that it's holding strong, or if it's violated, then it's either way holding strong. And that makes it a tight range here. So we want just all of this noise here. We want to see prices. If price does come up here, you want to see that push through with some degree of force. We do have relative equal highs here, the consolidation. So yeah. And then just throw this on after hours not in the market, right? And we discussed this yesterday and the day before, and this 5 ATR got closer to 5. We narrowed it down. It's like closer to 4 ATR. Either way, it's overextended. So from like -4 ATR to +1, then pull back to the moving average 20 EMA, back to the 1, 20 EMA, back to the 1, back to the 20 almost. So yeah, right now it's temporarily at least in a bullish order flow until it goes back below this moving average at least. And according to how we work, this right now is an inverted bearish fair value gap. So that's a change in the state of delivery. So that's already telling me what this 20 EMA is saying, right? So as long as it holds above here, then we can consider some bullishness. This is a volume imbalance. So it is a draw on liquidity. It's a huge magnet, but it's not necessarily a key support and resistance area all the time. You can see here that the midway point was a resistance area here and sent it back down. Came back here, midway point still holding strong. You can still see here that, hey, price definitely interacted with the midway point almost. And remember that the targets are draws on liquidity. A draw on liquidity doesn't mean that it has to hit that level explicitly, right? All right, so we got these. So in any case, this a normal distribution So we got 3, 2, 1. 1 to 1 is a normal distribution. We discussed that. 2 to 2 is, depending on what you're looking at, it's also generally a decent distribution too, right? So you got this one here, 1 to 1, moving average to 1, moving average. Oh, this is actually 2. Apologies. 1 is really light. I try not to make it too dark. It's already like squiggly line, like somebody scribbled on the paper, right? EKG, the heart attack mode, but it's all right. We're not in live markets. If you were in the live market, it still would be appropriate if you managed it appropriately. But that's on you, right? You could use this risk free value gap here, drag that out if you wanted to. That would be here. So you can use that as well. This is actually a balanced price range here. Didn't really hold true to anything, but you can see what happens here. This is good enough. It's good enough for me. And I'm gonna turn out the lights, turn out the lights, turn out the lights, turn out the lights. All right, so here, either way, we have a run on stops. We have a purge here. We have a, you can say, call that a revert here. There's no pullback. We mentioned the smooth 4-hour candle, smooth low. That's usually shows some degree of urgency. It's a clear sign. It's not a hard sign though, but it's a sign that price may want to go the other way. And in this case, this was a bearish order flow. We already did the measured move objective 1, and then 2, 1 pullback 2, A, B, C, D. So we got the smooth candle, push higher into here. Run these, didn't run the high, so it created the relative equal highs here. Got relative equal highs over here. So we got a low, essentially a low resistance liquidity run. I like to see price, if price gonna hold here, then it is what it is. I like to see price pull back down into at least this propulsion block here, or rebalance this, something like that. Kind of trade back into this new week opening gap, and then kind of come up here. I think we determined that tomorrow, this 8:30 news at 8. It's 8:30 news on Wednesday, March 11th. CPI, core CPI. So we'll see what's up. Oh, let's go and check out Oracle real fast, because that's what we did. We did map that out. Oh, look at you, Oracle. Look at you, buddy. The 4-hour chart. I remember. Definitely. So we definitely looked at it over the weekend, I think, right? Or was it Friday? I don't know. So anyway, kind of saw this. But yeah, this is good money, right? Run on stops. Market structure shift here. Pull back. Balance price range here. Didn't pull all the way back down. But inverted bearish fair value gap here. Run up. Market structure shift here pretty much with these relative equal highs. Pull back. Inverted bullish fair value gap here. Boom. And then we had earnings today. And it's all good, right? Decent right now. See what that looks like. Oh yes, this is where we stopped at Friday. Then it was like, oh, it's gonna drop lower. And now that's beautiful, right? Like drop down. Above here would be a market structure shift. So we got that here. Pull back into this bullish fair value gap up. Pull back. You got a bear. This is actually a bull flag, right? But continue lower. Inverted fair value gap. You can pull this out. And so that sent price lower. You can use that, but I would use this. Drop, took out sell side into this bullish fair value gap, or balanced price range, if you want to say that, and optimal trading tree long. And this didn't pop off into, oh, so it reported after hours. That was a good trade. That was a good trade. And it's there. Like, not rocket science, right? Optimal trade entry long. Let's add the boom. 61.8 entry if you want to make sure you get in, right? But you obviously, if you got in here, you're going to stomach some degree of drawdown. Let's see how many points that is. So 149.84, and if you wanted to, you got in here and price pull down essentially to 148, almost like a $1.50 drawdown. But look where we at, target 2. We almost at 1 standard deviation, right? Almost literally duplicated this swing high, this swing low to this swing high. Almost another one, duplication of that one. But we are above. This is a completion of a market maker, right? All right, so we got a market maker model inside of one. So up here would be a completion of one, and this right here is a completion of this one. This relative equal, this original consolidation here. This is your turtle soup, your purge. Here's your revert here, and just a return to origin here, and another entry. And this is your news catalyst. So you wouldn't really expect any big move here, but this is the purge. This was the purge on Monday. This is the pullback. So this, for me, this would be the stage. This would be A. This would be B, the momentum run. This would be C, the mean reversion, and this would be D, the low risk entry, or the pullback entry. Just kind of want to see. This wasn't even like ripe to do that with. Let's see if we can. Ugh, noisy, right? But yeah, 3 ATRs, the 1 pullback, 1 normal distribution again, 1 to 1, and then took off outside the 3. Let's see what we're doing, and we are essentially at 5 ATRs. It's still moving. But yeah, it works. It's good money. So but that was a good trade, and it was a good trade. Kind of spotted this pull down, this drop down here, then it's purge below here. This is your market structure shift. You pull back here, got a tiny fair value gap right here on the 1030 candle. Entry, push higher, pull back right back into where we entered at over here on the fair value gap. Let's just draw it out, man. There's actually 2 here, but whatever. I'm gonna do this one here, right? Then pull back here. We got another one. This is the 15-minute, so it probably reads a lot better on the 5-minute chart. Coming to you live. Pretty much reads the same This is just a little bit of an adjustment on the 5. But yeah. Now you got your bull flag here. Look to me, nice flag right here, right? Like, I'm gonna do this. Right. So right, boom, ran sells high, and then so all we did was 1, 2, and then anchor here, 3, and that's the channel it was in, and then boom, broke out of there. Get up out of here, son. Get up out of there. Still cooking right now. You can hold this still until price kind of shows like it doesn't want to stay inside this bullish fair value gap here. Anyway, I feel like I'm kind of done right now. That wasn't even part of the agenda, but it's good. Good, still the same study, right? Same setup over and over and over. Anyway, that's the 4-hour fair value gap that we highlighted. 15-minute fair value gap that's divided into quarters. And you can see that that's what price held on to. Pull back. This one was kind of tricky. It's kind of tricky because you would think like, oh, price would take out sell side, and it didn't. It did it here though. So end your liquidity here. Took that out. Didn't drop lower, but we have this here. Pretty accurate, right? And we have this one here. For the current one. Create that bounce there. And this is the 15-minute. This is the 15-minute. Right, obviously this big one here. And that would be 2 inverted bearish fair value gaps to support price higher. And that's just how I would see it. Now I was like, oh, how come? And then I was like, oh, there must be a divergence somewhere. But if that's not part, this is after hours, so I can do what I want. But in the real market, I wouldn't do this. But this is why YM ran the stops. NQ didn't. DS didn't. The NQ, the YM did. And there you go. All right, I'm gonna call it a night now. I realized also that's whoever's like actually like listen to it today, and one of the goals is like time and financial freedom, right? Time and financial freedom. And I remember like what that feels like, and it's boring. It's really, really boring to be like, what are you gonna do with boredom? So you got to think about that. Like, what are you gonna do? Like, what does that look like? What does that look like for you? And that means you need, like, if you trade, you put on one good trade. Plus, that's it. Get out. Go for a walk. Go do a workout. Go read Quran. Go read a book. Whatever you go, do something with yourself. Go watch anime or something. Like, your day is over. What would you normally do? Right? Ideally, you want to live, for me, live a life of hobbies, right? So you gotta have hobbies, or else, you know, if you consider yourself locked into the market and always like looking for a trade, always locked in, even though your objective for the day is met, and you still looking, still searching, like when will your wish be fulfilled? When will your desire, your dream, your whatever you prayed for be fulfilled? Because you're always going to be searching, you're always going to be looking, you're always going to be looking for opportunities. You're not going to give up. And when you actually do meet your objectives, it's boring. You met it, especially like me, like open and drive trades. Like, I'm done first 20 minutes. Like, I'm done. Like, done. 20, 30 minutes max. Like, done. I don't need nothing else. How does it feel to be done in 20 minutes that you prepared for like a long time for, but you're done in 20 minutes? Like, you're done the trade. Like, you got to go and do your journal, and you got to do your book of charts, and you got to do your playbooks. stuff like that, your report card. But overall, you're done with like actively trading. You're done. Like, what does that look like, and what are you willing to do when you're bored? But you still got to protect your account. You still got to protect your best interest. You know, and it's better for you to like. You got to know when to fold them. Anyway, that's all I got for you. Like, comment, subscribe, tune in, whatever. Deuces.